Hi, are you thinking about property investment and you're wondering whether you should go with negatively geared property or a more positively geared property? Or you're basically looking at the cash flow and one's quite negative or one's quite positive and you're worried about the tax implications of that? Well, I've got some quick views on that. It can help you in this video. Which can be better and which one can suit situations better. I'm 𝗪𝗧𝗡𝗡𝗘𝗖𝗧 from Tax Accounting Adelaide. We help a lot of people with property investment tax advice. This video is just some scenarios property investments can be more suitable for you. They're generally better for people not too close to retirement, so a younger person. Higher income earners, which because the negative side of the loss can offset that taxable income and act as a tax deduction in their tax return and increase their tax refund. So let's say the loss is 10,000 and just let's say your tax rate is 30%, that will help your tax refund $3,000. So in addition to the tenant paying for most of it, you're also getting a little bit of contribution, a better tax return, in this case $3,000 being chipped in from the ATO. Quick ones that are better for the negatively geared situation. Positively geared are better for people more towards the end of their career, or with lower incomes, so they're not really paying too much tax. So most suit someone who's semi-retired or starting out their career and still doesn't have a really high taxable income yet. So there's some of the situations that suit the positively geared one. And there's nothing wrong with positively geared, even if you do have to pay some tax on it, because obviously it's great to make the profit on it, and that's going to help you hoe into the debt on it if there's any debt on it. So nothing wrong with positively geared. Negatively geared, you're not necessarily going out to buy a property that's making a loss, but you may be able to handle that more so because of its potential capital gains down the track. You're only really going to want to put up with negative losses on a property because of the long-term strategy of trying to build capital gains in it. Of course, all properties should suit your individual or family income situation, so it's always worth looking at what you need to do in terms of your specific tax goals. It is maybe worthwhile checking in with your accountant, or we can give you some advice on which entity is best to buy a property in, given your individual circumstances. You may have other considerations, so it may be a large place, a large old place that's a large land holding, and you may seek to have some long-term land development or property development on there. So there may be another reason why you may want to consider something in between the two. So yeah, hopefully those views have helped you a little bit. So I'm 𝗪𝗧𝗡𝗘𝗖𝗧 from Tax Accounting Adelaide. Feel free to follow our posts and subscribe and listen to our updates and content. If you are interested in some individual property tax advice, feel free to book into that service with our accounting practice. Thank you. Bye.